If saving only happens when there's leftover, it usually never happens. A savings plan works because most people don't have consistent extra money to stumble into. Surprise bills show up, and good intentions disappear fast. If your savings earns basically zero interest, you also feel no progress, so you quit. Meanwhile, spending is one tap away, so the easiest choice wins. The fix is treating your plan like a bank rule: automatic, specific, and protected. And your safety money needs its own lane, separate from everything else. A real plan is just a clear goal turned into math and automation. Start by writing the purpose, because savings is vague, but a 500 car repair buffer is motivating. Set a dollar target and a deadline date, even if you change it later. Then divide the target by the number of paychecks until that date to get one simple per paycheck amount. Make sure the money lands in a separate account, not your main checking. Finally, set an automatic transfer so willpower isn't part of the system. Your plan only sticks if it matches how your cash actually flows through the month. Time transfers right after payday, not whenever, so bills can't eat the money first. Keep a small cash buffer in checking to prevent a tight week from turning into overdraft fees. If the number feels scary, start with a micro amount, like $10 or $25 per paycheck, and scale up. Build in irregular bills like insurance or car registration, and move bill money out of spending checking. Then adjust until the cycle clears smoothly. Automation is the difference between saving sometimes and saving every payday. Schedule transfers on payday or the next business day so the habit is consistent. If your employer allows it, split direct deposit, so part of each check goes straight to savings before you see it. Keep savings separate from spending accounts, so it's harder to borrow back. Fund it with standard transfers, not wires, because wires often cost money and add friction. Align bill due dates with paycheck timing, and review your automation monthly for drift. Most savings plans fail from avoidable friction, not lack of discipline. If auto transfers pull your checking too low, you can trigger overdrafts, so protect a buffer first. If savings is too easy to raid, add a little distance with a separate bank or limited transfers. Don't mix emergency money with goal money, or one crisis wipes out your progress. Missing one transfer isn't failure. Restart next payday. Review the plan at least quarterly, and don't chase yield in accounts with penalties or lockups you can't live with. If you do one thing, automate a per paycheck transfer into a separate savings account. BankingHub can match you to accounts based on how you actually bank and show the real dollar impact on your balance. Free, takes 2 minutes, and the link's in the description.